What's going on YouTube? Welcome back to the channel. My name is Dominic, most people call me Dom, and in today's video we're going to be talking about Volta charging stock. Now this is a stock that has been very popular on my channel as of late. A lot of my subscribers want to learn more about Volta. Either they're currently invested in Volta or they just want to learn more before they actually pull the trigger and decide to invest. So let me talk about some updates with the company. I am very bullish on the stock, especially after they dipped from their high of $14. They're currently trading at $6.95, so they're half of their initial value, which is crazy to think about. And they only have a market cap of $1.1 billion, which is practically non-existent in the current stock market. So first off, I want to cover some pieces of news. The first one is going to be from Business Wire, and it was uploaded about a month ago. I don't know how I let this slip past me, but essentially, Volta secured 2 new patents for their EV charging stations, and the first one is called the 715 patent, and it's titled Systems and Methods for Providing Targeted Advertisements to a Charging Station for Electric Vehicles. That's a very long name, but it perfectly describes what the patent is. If you guys remember from one of my past videos, we talked about Volta's business plan. They're going to make money off of charging customers to, of course, charge their vehicles, but they're also going to be making money from advertisements that they're going to be targeting to the consumer that's charging their vehicle. It's very smart, and they say that their system and their algorithms are very, very smart, and they're powerful, and that companies have already doubled, tripled sales from using their algorithm for these charging stations already, and they're very bullish that they can make a lot of money through advertisements. So apparently they have a patent for it, and it says that it covers a variation of Volta's innovative methods for providing targeted advertisements via EV charging stations. The patent's claims include selecting and then displaying an ad at a charging station being actively used to charge an EV based on information known about the individual using that station. When the station is not charging an EV, a different set of ads may be displayed based on certain demographic information related to the location of that charging station. So this is very powerful, and they're essentially using this similar to Facebook ads, where Facebook ads target the individual and their interests and what they believe would be a good ad to show them. Volta's doing the same thing as it says right here. They want to use different ads based on the information known about the individual. So that's exactly what they're doing actually. They're targeting different demographics based on what they are. Like if some person, owns an electric vehicle, obviously, you can assume they're going to like this or that, and they're going to target ads that target those things for the consumers. That way the people who are paying for Volta to run these ads get more brand awareness, they get more sales, and they're more likely to funnel more money back into Volta. It's a very, very smart idea. And of course, the second patent, they called it the 482 patent, and it's titled Charging Station with Articulating Panels. Another one, it says this patent covers Volta's invention of an EV charging station equipped with 2 electronic displays. Each display is hinged to a panel on the opposite sides of the EV charger's frame, so that the panels may open and close with respect to the frame. This design allows for convenient access behind the displays and inside the EV chargers. So this one's more about the design of the electric vehicle charger and how it's designed and how it's built. This one's still very interesting as well because they're gonna have features for their chargers that no other company can have because they have patents on it. It's very smart, and that's what you want to see. Obviously, they're patenting their ideas, so no other competitor can take them. Last thing I did highlight from this article is a quote from Scott Mercer, the founder and CEO of Volta, and he says that our value proposition for brand partners, site owners, and drivers alike has always been predicated on our ability to innovate and adapt. These new patents add to a portfolio that reflects the foundational elements of our product design and our rich user experience, further positioning us as a premium partner within the EV charging space. This is a second article also from Business Wire, and it's titled Volta Partners with Floor Decor to Provide Electric Vehicle Charging. If I scroll up, it shows a photo of Floor and Decor if you guys aren't aware. It's a very, very big hardware store where they sell decorations and flooring. People who spend their time at this store tend to spend a lot of time there. It's similar to an IKEA where once you're there, you're going to be consumed for a lot of your day in this store, so it's smart that they partnered with them. It says that the charging stations are slated to be in place for customers at 8 Floor and Decor locations by the end of this year, with more stations nationwide in 2022. They say that Floor & Decor strives to make a positive impact in the communities where we live and work, and the addition of Volta charging stations provides both convenience and the ability for our customers to lower their environmental impact, said Brandon Shaw, Senior Manager, Real Estate Consolidated Systems for Floor & Decor. They talk a little bit more about Volta here in this paragraph. I don't really want to talk about it. This is a quote, though, that I always love to mention. I always love quotes, especially from CEOs of companies like Scott Mercer. And he said, Volta's mission is to offer convenient, reliable electric vehicle charging at the places people go. By showing that people can fuel up where they drive, not drive to fuel, EV charging is an ideal service for businesses such as Floor & Decor who want to show that they care about creating a superior shopping experience as well as make a good environmental impact. Which is true. Customers are going to be happy, especially those who care about the environment, to see that they have electric vehicle charging stations there. And of course, it's just going to help encourage more people to go to Floor & Decor, because if you're going to go to Floor & Decor anyways, why not just take your electric vehicle if you own one and have your car charged while you shop around? It's very smart and I love it. I just love the idea that they're running with. Now, I don't want to go over every slide for Volta's investor presentation because I did talk about them 2 or 3 weeks ago, but I do want to mention a couple slides. The first one I want to talk about is going to be their TAM, their total addressable markets, and this sums it up right here. The traditional fueling space is worth $500 billion, and all of that is up for grab because gas stations are going to slowly have to convert to electric vehicle charging stations before they get ran out of business. So this is what the slide says. It says $500 billion of revenue will shift as fueling behavior evolves. They got this number from $300 billion worth of miles that people drive, and another $200 billion worth of non-fuel amenities that people also use when they go to the gas station, whether it's snacks, it's drinks. So that's a lot of money, and a lot of money on the table, and Volta wants to take advantage of this huge market that's going to start changing very, very soon. This is the unit economics behind their charging stations, and as you guys can see, they generate a 6 to 7x ROI currently per charging station after 10 years. So that is a great ROI. They make their money back on average in 3.4 years. They have a 3.4 year payback period and a 46% internal rate of return each year as well. So as you guys can see, the very first year, as soon as they make the charger and they set it up in a place, right year 0 right here where my mouse is, and most of them, they're down, they're negative money. After 1, 2, 3 years on average, they made their money back and more, and the rest is just going to be pure profits. And as you guys can see, the profits just start piling up year over year over year over year, all the way to they 6 to 7x their ROI 10 years later. This is their projected ROI in the future after they, perfect their their EV charging stations. Once they're perfected and they mature in the economy, you guys can see right here, they have a payback period of less than 2 years. My mouse is year 1, 2, 3, all the way up to year 10, where it's just pure profit and 142% internal rate of return year over year. That is crazy. This is all cash flow that they can generate after they first made the charger, which should make you bullish, because all the chargers that they're making now aren't going to really flourish, and they're not going to see any cash flow come out of the new current chargers until probably 2028, 2029. That's when you're going to start to generate significant cash flow on each charger, and that cash flow is only going to increase year over year. So this is a great long-term play, and I really do hope you see what I'm talking about here with these unit economics, because this cash flow is going to grow exponentially. This is an exponential company. You're going to grow your money in this stock very, very slowly, but year over year it's going to start increasing and increasing and increasing. 10, 11, 12 years from now, you're going to be kicking yourself for not buying the stock at $6.95. You really are. And just to help you guys visualize what I'm talking about with their revenue, growing exponentially year over year, this is their revenue forecast for 2020 all the way through 2025. And as you guys can see from this bar chart alone, the growth is very, very big. On average, they have an 108% compound annual growth rate. So year over year, they're growing at 108% projected. They're projected to be EBITDA break even by 2023, which is very, very good. And as you guys can see, the proportion of their 2025 forecasted revenue is going to be a mix between, what's to say here? It's going to be a mix between Network developments is going to be a mix between charging operations and then behavior and commerce. So behavior and commerce is the light blue here. 41% of the revenue is going to be coming from advertisements. That's a lot. A lot of the money isn't even coming from charging. It's going to be coming from advertisements. They're going to be a lot more profitable than their competitors who aren't advertising. Then as you guys see here, charging operations, this middle bluish gray color is going to be equal to 45% of their forecasted revenue. And then the remaining 14% is going to be a mix between network developments and their data, intelligence. So that's very, very good. They have numerous ways to make money. They have numerous income streams, which means that they're diversified within the EV charging space, which is hard to say for some of their competitors. They're no doubt going to be one of the most profitable companies in the space because they're capitalizing on electric charging, on data, and on advertisements. You really can't beat it. You can't beat it. And just to show you guys why the revenue is going to increase so much, this shows the cumulative amount of chargers installed year over year from 2020 to 2025. Last year in 2020, they had 1,600 chargers. 5 years later, they're going to have 26,000 chargers. The growth again is huge. It's exponential, and all these new chargers they're building aren't going to really be profitable until 5 or 6 years down the line, and they're going to be the most profitable 10 years down the line. This is a long-term play. You got to hold Volta and just trust in this data, because if this data does pan out to be correct and they do average a 6 to 7x ROI on each charger, all the chargers built in 2024 and 2025 aren't going to see any real cash flow until 2033, 2034, 2035. We're talking 10 years at the minimum for a lot of these chargers that they're building, which means, hey, it's a wait. It's not a get-rich-quick stock. Volta is not a get-rich-quick stock whatsoever, but it's going to be a stock that you buy in a Roth IRA or in a retirement account, and you just let it sit for the next 20, 25 years. Of course, you're going to have to pay attention and make sure the company's not going bankrupt and that their fundamentals don't change, but this is a great company to hold for the long term, and it's one that I personally am holding. Anyways, guys, this is going to be the end of today's video. If you did enjoy, please subscribe down below, like the video as always, and turn on post notifications. I greatly appreciate all the support. If you want to support the channel even further, you can become a channel member down in the description below. It's $2 a month, and you get access to a once-a-month stream that I do just for my channel members. We get to talk about different stocks you want to talk about. We just chill and have a good time on stream. It's just a great vibe. And thank you so much for watching the video, and I'll speak to all of you guys in the next one. Peace.